Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong historical support and demand area. From here, all these previous rejections to the downside were created. So every time that the market tested this zone, it got rejected to the downside quite aggressively. Now we just had the break above the zone, confirming a shift from previous resistance to support, because as we know, a strong level of resistance, once it is broken to the upside, becomes support, and the market in fact retested here the level as support, respected it as support, and rejected it to the upside. And currently the market is still in the process of rejecting this zone to the upside. So from a monthly standpoint, everything seems quite bullish. We can also notice that from a pattern perspective, since we have an impulse and correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 0.32 and 50% retracements lining up exactly with the previous resistance turn support. And this means that essentially we have confluence of support in that area because we have multiple layers of support lining up in the same area of price, which creates confluence of support. And when we have a confluence of support zone, that increases the probability of seeing institutional longing inside of the zone. And we will be speaking about institutional longing in just a few moments when we move to the commitment of traders analysis. For now, let's keep this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. We can notice that the last pattern that the market had was this W formation. Now, as explained many times, after the creation of a W, what you would expect is to see first a completion at the neckline and then the potential continuation to the upside. I also spoke about gold while the market was creating this W formation, explaining all the reasons for which from here we could expect first a completion of the neckline and then from here a potential continuation to the upside. And what we can notice here is that the market has just now completed the W formation by testing this previous weekly resistance, which is now turned support here. We can also notice that from a pattern standpoint, again, we have an impulse and correction. So again, we can measure this correction by taking our Fibonacci from the low to the high. And what we can notice is that the neckline is also the area in between the 0.618 and 0.786 Fibonacci retracements, which means that also this one here is a confluence of support zone, inside of which there is an increased probability of getting institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. Speaking about institutional longing, before we go down on the daily time frame, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. Now, if we look at the data for gold, what we can notice is that with the last reports, net positions have been massively increased. We went from having essentially 131.1k net positions as the lowest level, all the way up to having 285k net positions. So we had a huge increase of longs, which went from 211k all the way up to 349k. And the shorts got decreased from the high here at 86k down to only 64k from an institutional perspective. So currently we're sitting with institutions having 349k longs compared to only 64k shorts, meaning that institutions are expecting even more potential bullish development for gold as they continue to be positioned aggressively to the bullish side. So unless we start to see now a massive decrease of net positions, the fundamentals for gold seems to be quite still bullish, and gold still seems to be quite strong from an institutional perspective. So let's keep this in mind and move back to the technical aspect of this market. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. So the monthly, weekly are quite clear. Let's drop down the daily time frame. Now, from a daily standpoint, this area that we have already identified on the weekly is quite clear, and we can notice how we have a lot of structure from a daily perspective around this zone. Now, the nearest level of support would be this previous area here, which was acting as demand and support from which all this push to the upside started, which at the moment the market has just approached. So this area is a potential support and demand area on the monthly, weekly, and also daily time frame. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, rejecting this weekly confluence of support area to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.